Good morning, everyone. I'm Vince Lancy. It's 8 a.m. Monday morning, and this is the Gold Fix Market Rundown. There's our homepage. You can see the stories that we put out this weekend. Today, we have two topics. The first one is globally owned golden yuan closer to reality. That's a mouthful. Let's just say that the China is taking the gold market international, and they're attaching the yuan to it. And this is all part of the BRICS rollout. And it's getting a lot closer to reality, internationalization of gold. The second one is focused on current events, which is why gold is $66 higher. Why silver is a percentage point higher, even though it was higher than that, and why copper is also up 4%. We're going to touch on why exactly that is happening, and we pretty much think we have the answer. We'll see. All right, so there's the market analysis. Before we start that, let's start with the markets themselves. 10-year yields are up 3.5. The dollar's 98.80, down 63. That's bad. S&P 500, 58.84, down 18. That's bad too. And the VIX is up 1. Wow. Okay. Not big moves, but it's the direction that matters. Gold, 33.55, up 66. More bad news for Treasury bulls. Silver, 33.29, up 31. Copper is 483, up 18. Up 18. That's freaky. Copper is up 4%. Wow. If I've ever seen a market more repressed than silver, I forget. I haven't seen one like this before. WTI 63.71, up 264. Wow. Okay. Natural gas 343, up 25. Holy shit. Bitcoin down 1,500. Tech stock. Palladium up 12. Russia. Platinum down 9. Economic. No one cares about it. Gold, silver up 1. Grains mixed. Wheat up 9. All right. Let me just get my thoughts here because this is really, it's very clear what's going on in gold when you look at this. Give me a second here. Time out. This is the news, the two main news items of the weekend manifesting in all the markets. The Ukraine-Russia escalation on the eve of the peace talks, and the China-US shredding of the 90-day peace ceasefire on tariffs. This whole board is a direct reflection of that, as manifest in resumption of stockpiling and fears of global energy throttling, stockpile problems. Okay. I will focus on that. Let me get to the actual story that we thought was interesting going into today. All right. That's here. The Shanghai Futures Exchange announced sweeping reforms on Tuesday aimed at giving overseas investors and brokers direct access to China's gold and silver futures markets, an aggressive step in Beijing's ongoing campaign to shift commodity pricing power eastward and gold and yuan ownership across the BRIC developed world. Our writing there, as you can tell. We included a story that's directly related to this. China builds global gold vault network for the BRICS 2025 announcement. The SHFE unveiled the 34 new policy proposals designed to fully introduce overseas participants into domestic trading, covering areas from hedging strategies to metals options. Where is that? Oh, I cut myself short. There it is. Critically, the reforms would allow foreign brokers to participate directly, bypassing the current requirement for onshore intermediaries. Additionally, foreign traders will be permitted to post margin in US dollars and other major currencies. The move comes amid broader state-backed efforts, that's what we're talking about, to internationalize China's financial system and increase the global use of the renminbi. Okay. Here's a quote for you. The announcement is basically a constitutional change for the entire SHFE opening up access for foreign investors to all the SHFE products is on a fast track from now on. Okay. On April 21st, the People's Bank of China, PBOC, along with 3 other ministries, issued an action plan supporting the development of the Shanghai Gold Exchange as a global platform, including provisions for overseas delivery warehouses. That's the Vault program. This is the internationalization of the yuan on the back of the gold vaults going all over the place. That's the physical changes. The financial changes are an opening up of the market to allow foreigners in. Foreigners, you may think that's like, investors. It's not just investors. They're looking for liquidity providers. Bullion banks are in there already making markets. This market is, the COMEX is being raided. There's not much left except for the brand and the hanging sign over the old mall. Okay. The comment is, we accept dollars will become, but we prefer yuan. They accept dollars. Well, when the dollars are in there, they're going to say, you know what? You're going to transfer them into yuan anyway. That's what's going to happen. This is it. I mean, this is what we've been talking about for years. Okay. So let's move on to why the metals are higher right now. There are 4 important stories. 2 of them are very important. The Ukraine-Russia escalation on the eve of peace talks would probably be the most, World War III important. And the second one is the refreeze on the tariff thaw that we had between China and the US. Now, going to read a little bit here, and then I'll give you a quick comment that's hopefully going to put all this in perspective for you. The Ukraine escalation deepens before Turkey talks. Kiev launched high-impact drone strikes deep into Russian territory, hitting airfields as far as eastern Siberia. In response, Moscow carried out one of its most extensive aerial assaults on Ukraine in recent months. The intensified military exchanges raised the stakes ahead of today's diplomatic meetings in Turkey. Okay, number 1, you don't negotiate what you can win. So you win and then you hold your ground. This is, it's a land grab. It's a land grab before negotiation. The obverse of that is nobody wants peace here if it helps Donald Trump as well. So while Putin is defending himself, defending his gains, and Ukraine is showing strength, if you want to look at it that way, tactically, going into the negotiation that they're not going to roll over, well, everybody's happy about this except for Donald Trump. Nobody wants the war to end, okay? That's why, in part, energy is up. That's why, probably for the most part, natural gas. Remember, natural gas is really big in Europe. What are the new sanctions coming out? Are we going to sanction natural gas? Are we going to make it even harder for Russia to deliver energy? Well, that's why natural gas is probably up 20%. So I could be wrong. It could be weather related. It's doubtful, though. This is not the time of year natural gas spikes. Oil. I mean, here we go. We're going into an increase in sanctions again. The market is discounting future demand being met by decreased supply. That's the war. Okay? What does that make you do if you're an energy person and you need energy? Because you need energy. You can't do without it. You stockpile. So energy's up. Okay? Now we move to the China one. Hopes for renewed U.S.-China dialogue quickly dimmed as Beijing accused Washington of violating their latest trade agreement, and U.S. accused Beijing of doing the same thing. So they're basically just agreeing to disagree, and the thaw starts. Now, I'll try not to analyze this part, but the fact of the matter is, what do you do if you're in business and the economy is doing well and everyone's going to ease rates anyway, and there's going to be a tariff resumption or tariff war escalation? You stockpile. That's why copper's up, okay? That's why gold's up. Gold's up for all the reasons, right? But copper's up because there's a stockpiling of economic metals. And then you look at silver and you say, well, why is silver only at 1%? It's the reason I've been telling you for the last 2 years. And that is copper is completely industrial. So you're going to buy copper before you buy silver. Silver is half industrial. So you're going to buy gold, and some people are going to sell silver against their gold. That's the way they think. That's the way it is. And I'm actually excited about that because it will be a face-ripping run when it happens soon this time. The other, and we'll touch on that in a second. The other thing is, you know, the last stockpiling, I talked with Josh Fair about this at Scottsdale. The last stockpiling ahead of the tariffs was massive in silver. We had a massive run in silver when that started. And that stockpiling was basically companies like GE buying all the silver they could, front loading for the tariffs, right? So, and then when they were doing that, speculators were also saying, oh, everyone's buying silver, and they bought silver and they leased silver, right? And they were front running the tariffs, expecting the price to go up. Well, the tariffs didn't go into effect. The price dropped, stabilized, and all the demand from the GEs of the world was satiated or filled. So this time, I think speculators are just being a little bit careful about silver. And that's a good thing because it's just going to make it that much worse when it happens. That's my opinion. We'll see if I'm right. The comment basically is this. The bottom line is stockpiling, like when the tariffs were going to go on last time, resumes. That's it. That's all in the Gold Fix Weekend News Brief, as well as the two other stories. Morgan Stanley says the dollar is going to weaken more. Take it for what it's worth. And Scott Bessent said the U.S. will never default on its debt, which is obvious. We'll print the dollars, which means a slow default. And that's the news. That's why the markets are doing what they're doing. This week, the end of the COMEX era, the post-COVID world and how everything changed. That's a thought piece based on something I wrote in HeartNet. And probably so far, I think the most interesting thing in context of my emerging opinion on silver is Bank of America says silver will go to $40 before gold goes to $4,000. Now, we have access to that information, and we will share it with you after we've gone through it. And of course, we have the Founders AM analysis, and there'll be a lot more, I'm sure, considering what's going on in the world. Related post over the weekend, we didn't put up a lot, but what we put up, I think, was very important. The first two, Goldman, buy gold, not bonds, 60/40 is dead. That's their appeal to international, global, however you want to call it, pensions and institutions to stop buying bonds, start buying gold. They're telling fund managers, they're telling CalPERS, buy gold, not bonds. The world is now shifting, okay? HeartNet, we're going to need a bigger bubble. HeartNet's report was basically big is in play. Bonds, buy international stocks, and buy gold. And what would make that stop happening would be if the tariffs didn't go away, if the tariffs came back. Well, here we are. The tariffs are coming back, and actually, I got that backwards. If the tariffs had to be killed, okay, Trump has to back. If Trump backs off on the tariffs because he can't get the tax cuts, then the U.S. is just going to ease. So this is on the table, but it's not a headline today. I think the picture's a headline. I got a little HeartNet blowing a bubble picture there. But the real story is tariffs are back. That's the emerging story right now. And then we have the other stuff going on there. Data on deck today, 9:45 is the S&P final PMI, and 10 a.m. is construction spending. 10:15 is Dallas Fed President Lori Logan. I don't know who she is. 12:45, Chicago Fed President Austin Goolsbee. I know who he is. And 1 p.m., Fed Reserve Chair Jerome Powell opening remarks. If you're interested in these at all and you're trying to prioritize them, none of them matter except Powell. That's just the way it is. Goolsbee, again, a lot of print. People like to listen to what he has to say. Great. We'll wait for the book. Summary and final market check. Shanghai buying has been met with Western selling during Shanghai hours. Again, I'll fire my intern for the spelling there. But last night, that did not happen. This is something that came up in the founders conversation. In the founders conversation, we noticed that as liquidity continues to walk away from the COMEX, volumes are drying up, open interest is drying up. Markets don't trend on COMEX, they only trend in Shanghai. We had noticed that Shanghai was opening stronger every night. One of the founders, I think it was Britt, Shanghai was opening higher and then getting hit, opening higher and then getting hit. And that lack of follow through, we think, was because the U.S. liquidity was going there as part of their business model. Look, if the order flow is going there, then the liquidity and market making is going to go there because bookies go where people want to bet, right? And then the other aspect of that is last night Shanghai bought and no one stopped it. So if Shanghai trends, don't mess with it now. And Europe, which is where bigger problems are, that's like the epicenter of the Ukraine-Russia thing. Well, Europe's not going to sell gold right now, right? Especially when Europe's the one telling everyone to sell bonds, which brings me to the very first thing I talked about up top when I kind of went, holy shit. Look, it's not big, but yields are up, the dollar is down, stocks are down, and gold is up. That's the worst case scenario again. Now, I believe that's extremely important because it only took two news items like this. They're big news items, don't get me wrong, but it only took two news items for the whole market to shift tone from bonds are good, dollar's bad, bonds are bad, dollar's good. Oh, this is bonds and dollar. And then the news items come out and this is bonds and dollar. That's really bad for the market to knee-jerk react like that. And I believe that's a comment on a world that's in the process of either selling its treasuries out or more likely hedging its dollar exposure in treasuries. So let's move to the markets themselves. I'm going to just focus on silver here. All right, so there's the Bollinger Band. I had a fake breakout, right? I got long. I'm still long. I probably have like 4 more days left in these options, and everything is exploding today except silver. I'll put this chart up a little bit cleaner. Everything is exploding today except silver. Why is that? Well, you know why. I told you why. Why does that excite me? Because this false breakout here, this is a trading comment, right? This false breakout here should have been accompanied by a breakdown. It should have been an immediate first way, wrong way is what I call it. First way, wrong way. And it didn't happen. So even though we're in a range, say, of down here to up there, the market should have traversed back to down here, and it did not. So this market is capped by selling by people that are buying copper and people that are buying gold. And these almost invariably reconcile with silver going higher. So am I going out there buying it today? Probably. I shouldn't, but I probably will. No, what I'm saying is that this area here, even more important than it was the first time I broke through, right? I broke through. It broke through, and I got long on a false signal. So this actually increases in importance. I don't know what's going to happen here or here, but I assume that we really have to get up here. So a settlement over 33.69 in spot would probably, I'm not 100% confident yet, would indicate to me that this level here, 34.56, doesn't matter. So I'm going to say, tentatively speaking, 33.70, closing above 33.70 should get you $35. Don't hold me to it yet. But I'll lose money if it doesn't. I'm Vince. Have a great day.